What's up, everybody? Welcome to Own the Chaos. My name is Brad. That is Fat Man Zoom. The stock market is crazy and chaotic, and we made it our mission to help you own it. And we have a fantastic topic today. It is the Airbnb IPO, Fat Man Zoom.
Yeah, this one's a tough one. Everybody and their sister is getting into this stock. Even the people that normally don't play IPOs, hint, hint, are thinking about getting into this stock. And I think you and I are going to kind of duke it out a little bit and make the case on whether we need to buy this stock at IPO or wait. And at the end of this video, I think you'll have your answer.
Maybe, or you might be just even more confused. We'll see. But I think we're going to be able to give you some really good insights and just how we're planning on playing it and what have you. And let's just get started. So Airbnb, they're going to be available to trade on Thursday. Their IPO price is set to be anywhere between $44 and $50 per share. Fat Man Zoom and I both agree it's probably going to come in much higher than that because of the amount of hype that could be on this stock. But I actually think that for me personally, I got the FOMO, and I'm not even going to hide it. Okay. But I think for me, if I'm going to try to get into the stock, I still want to try to be realistic about it. And I'm taking more of a YOLO approach. And so then I'm going to use YOLO money, meaning that I'm not going to take a whole lot of money that I can't afford to lose and dump it into Airbnb because I think it's going to go to the moon. No. And take a very small amount, and then if it goes above probably around $60 to $62, and I can't even get in, then so be it. But man, I feel like there's just a part of me that knows that there's a good chance this gets to $100 a share. And so I just kind of want to hedge that, or I guess scratch that FOMO itch a little bit. And so I'm doing it in a way that's almost kind of like a guilty pleasure, just trying to hop in with some money that I'm not gonna, it's not gonna break my bank, but I'm just really excited about this stock, and I'm excited about it long term as well. I think that it's going to do really well.
Yeah, and apparently they're sensing that FOMO for a lot of traders because this morning in their S1 filing, they amended it, and it's now $56 to $60 a share.
There you go.
So you're already going to have to pay more, brother.
Right.
But I understand the FOMO, and this is the first IPO that I actually did think about, and I looked into it. What it really boils down to me is the valuation. But before we get into that, let's sort of set the stage on how we traditionally feel about IPOs.
Yeah.
We both have similar sentiments where we stay away from IPOs. And we typically wait usually until the first quarter earnings, their first public quarter earnings are released.
Yep.
Or a massive pullback before that. Because what you usually will see, and if you pull up a stock like Asana, if you go way back to like Facebook when it IPO'd, they were similar. Most IPOs are similar, whereas Asana had that run up first day, you'll have a spike, you'll see the wick, but then you'll see it pulling back. And Asana just actually today passed that pre-IPO or that IPO price.
Yeah.
That's very common how you see it. So that for that reason,
you called that, by the way.
Get in and do it. What?
You called that move up above the IPO price today. I just wanted to shout you out.
The only chaos watch list. It was on there, baby. It moved up almost 13%?
Yeah, 13% was the high for today. Yep. Crazy move out of this one. I actually want to share this. So just to give you guys a visual of what we're thinking, what we are talking about with Asana, it came out, ran all the way up to $30 a share, and then dropped 30% from there in the weeks following. And so this is kind of what we're talking about. For me, I'm like, I want to play this hype just to kind of, like I said, scratch that itch. But I understand that there's very good likelihood that this is going to continue to fall here. And I want to show you too, like Snow was the same way. We saw Snow go absolutely insane. Now it's back up over those pre-IPO prices, but you got to endure a lot of pain before you finally get back there. It went all the way up to $320 a share its first day after opening up around 230 something, and came all the way down as low as 208. So you had to endure all that pain and wait for a whole entire quarter before you finally got back to your original IPO prices. And that's where Fat Man Zoom and I are coming from.
Yeah. So here are my thoughts. I think if you want to day trade this, I think this is going to be an opportunity to day trade. I ain't mad at that. If you want to scale in, cool. I ain't mad at that either. But let's talk about the valuation. So here's what I'm looking at as far as it's concerned, because we said, let's just take that high price, $60 a share.
Yeah.
I don't think either one of us I don't think anybody believes that actually we're going to get it at $60 a share. It's where are we going to get it at?
Yeah.
So to your point, I think the first thing you need to realize is like, what are you going to pay for it? We talk about strategy all the time.
Yep.
Before the day starts, know what you're going to pay for this stock and what you're not going to pay for it. Because obviously if it's $150, that's a different sort of conversation. So know going into it what you're willing to do, because otherwise you're going to get emotional and you may potentially pay way too much. Establish that. And then I would also suggest knowing when you're going to scale in. So if you're going to scale in on a pullback, and it's maybe not, if you're swinging it, which I feel like most people would be swinging it, what will that be? Because that pullback could be pretty drastic in how they do it. But here's some numbers to consider. If we do have $60 a share, its valuation would be, its market cap would be at $42 billion. And to give a little bit of perspective, Booking.com, which is a stock I actually really like, they're at $87 billion and they have ridiculous financials. They're profitable. Margins are great. Now their growth isn't the same. So if you take the comparison, they have about a 5% growth. And I know you're going to get into a little bit of the growth for Airbnb. Yeah. They have about a 5% growth, but they have great partnerships. They basically are, to me, are their main competitors. Some would say Expedia, but I think it's Booking.com, because they also list properties that Airbnb lists. And so for me, I'm having trouble justifying that, because then if you start growing that number, let's say it gets to $100 a share.
Yeah.
Now that's a $70 billion market cap. You can't convince me that it's worth that much in comparison to like Expedia, who has revenues of about 4x what Airbnb does.
Right. Yeah, I definitely understand where you're coming from. And I agree. I mean, I think that there's definitely going to be some lofty valuations here. But if it's one thing that I've learned about a lot of these tech companies, and I would really consider Airbnb to be more of a software marketplace company, you look at something like Zoom that's 90 times sales, and you think to yourself, well, there's no way I'm going to buy it here, and people do all the time. So there's definitely that. I think that what for me, it's more like forward looking. What's it going to look like in the next 5 to 10 years, and are people buying it in anticipation of that? And I think that there's definitely some of that could be in play. And so do we even see it, I don't know. It'll be interesting to see, especially because you pointed out, and we can look at this in the S1 filing that we were looking through. So if you guys don't know what the S1 filing is, this is basically where we went to find a lot of our numbers to try to determine whether or not we felt like Airbnb was going to be a good play. Looking at this, I'm looking at the adjusted EBITDA, and it actually was moving along pretty good up until 2019, where it had a huge drop off. And Fat Man Zoom pointed out a really good metric as far as revenue to consider as well.
Yeah. So as far as that's concerned, what sort of we came to the conclusion of the reason why, from a cash flow perspective, you see this 2019 stands out really on the chart is like, okay, why is it so different? And it looks like you actually have a poor balance sheet, and you're seeing negative numbers in there. They increased their spending, their sales, marketing, advertising was increased drastically last year. I think it was to boost up the revenue, to essentially prepare for IPO. And so that all makes sense. Now, where some would say they may bring up the COVID and that essentially like this is a bad timing. I think this is perfect timing, because what it has done is it's forced them to cut cost. So they practically have no marketing and advertising costs currently, and it allows them to recalibrate. If they were public, they wouldn't be able to continue with these expenses through their earnings. And this is what would cause these drops afterwards, because it would just be excess spending. Yeah. This allows them to recalibrate, not to mention next year when you go through the quarter's growth, they have a low bar that's now been set with COVID. So on that side of things, I think it really bodes well for the people that want to get into it and make it a little bit of an anomaly. So that's what you also have to know is there was an intentional push in increasing revenue, and that showed up on the marketing and advertising expenses.
Yeah, man, and that's definitely worth pointing out for sure. I'll leave you with this. I think, in my opinion, that Airbnb is going to do really well moving forward. I think that this could be something that starts to eventually work into and take over a lot of the market share as far as hotels are concerned, unless hotels somehow figure out how to pivot away. And you brought up when we were prepping for this about, well, what happens if hotels do end up pivoting and they end up just buying properties to be able to do kind of something similar. And so that'll be interesting to see how that unfolds. But I think for me, Airbnb is going to be a good longer term hold too. If you're looking for something to invest in longer term, put in a long-term account, I think this is going to be a great one. I would probably, though, end up waiting to see if what happens after a lockup period or after those first quarter earnings. If you're looking to do that for a day trade, I got to scratch this itch, man. I got to look to see if I can get in on IPO day.
Well, and the last number I'll bring up is the main reason why I didn't feel comfortable getting in right away was because of their two previous offerings. So earlier this year in April, right at the beginning of all this, they had an offering and the valuation came out at $18 billion. Now,
yeah.
we always talk about, it's worth what people are willing to pay for. And we know that at least the retail crew is going to push this thing up. But in April, it was worth $18 billion. So now you're telling me it's worth 40, 50, 60 billion dollars. Right. As an investor, it's different. Now we're talking about trading, day trading, maybe swing trading.
Yeah.
Okay, cool. That's different. In 2017, the valuation when they did an offering was $31 billion. So that was the main indicator why, to me, it's not a buy now. I'm going to wait. I'm going to wait for a pullback. But I think we both agree, at least if you're going to get in, get a starter. Don't be greedy. Don't worry about the FOMO. It will pull back.
Yeah.
Right. It'll have runs both ways. It'll be volatile. So it's okay to get it. I know I'm going to get hammered about all the reasons why I should be good. But what I encourage you guys to do is join the Chaos Crew, because we're going to be talking about this as it plays out. There's more things we need to talk about. We didn't even mention the user, the homeowner side.
Yeah.
Right. And the legislation, and as it rolls out internationally, you can bring a lot of correlations between the Uber IPO as well, and you could bring them to the table. And that's what we do in the Chaos Crew. This is definitely going to be on the watch list as we move forward. So if you guys are interested, the Chaos Crew is somewhere to be to follow along with this stock.
That's right. And if you want to be a part of the Chaos Crew, hit the join button next to subscribe, or there's also a link in the description. We provide a daily watch list as part of being in the Chaos Crew, as well as private live streams and the like as well. I will say one last thing, and I mean, it'll be interesting to see if this creates a cult-like following, kind of like how Peloton and Zoom and Tesla did as well, because maybe all of that just gets blown out of the water. So it's going to be fun to watch, guys. If you are visiting for the first time, hopefully we earn a subscription from you. We certainly would appreciate it. And hit that notification bell, because we go live several times throughout the week, as well as putting up videos that are helpful to you like this as well. Fat Man Zoom, anything else you got for him?
Yeah, I got a bold prediction.
Oh, okay.
We're going to be giving away a share of Tesla this Sunday.
Ooh.
So we're near 1,000, and we made it a commitment that we're going to give away a share of Tesla to one Chaos Crew member. When we hit 1,000, we'll do a random drawing. So it's going to be, we're so close.
Yeah.
We're so close. It's going to happen. So if you've been thinking about getting in, what are you waiting for? Now's the time. Have an opportunity to win a share of Tesla.
We're really itching to get to this 1,000 as quick as possible, because Tesla's costing us more and more money every day. With that being said, guys, thanks so much for tuning in. We'll see you next time.